I'm still in ZM now, and I have only 5 shares left, by the way. Only 5, but let's see where it goes. How are you doing? I still have... Yeah, I was really long biased on this thing. I still have 5 shares. 5 shares is nothing, but 5 shares with $10, it will be $50. So let's see if it gives me that. I'll be happy. Yeah, it's getting close. Third day.
Stove this afternoon, so yeah. Just IMMU is my big trade. I just got out the rest of it a minute ago because it looked like it was going
That's
up.
an international ticker.
Whoops.
Yeah.
Okay, I see that. You shorten it, right?
But yeah, I shorted it from VWAP. I thought it was going up, but look at it now. It dropped back down, so maybe I should have continued.
Yeah.
I reduced my stop from 27.50 down to 27.30, and when it came up and broke that, I just said, "Oh, you know what? I'm just going to take it off."
I
But
see that.
oh well. Anyway, it's all right. I didn't have much left.
Yeah, it's still a good one. Good job. Clear with what we're doing here. Send a screenshot of your trades in the off-topic chat. Preferable 2 different time frames, at least 15 minutes before your entry and 15 minutes after, so that we can get a full picture. And we'll get into it right now. Fig Jam, you liked the triangle webinar. Thank you. I really appreciate that. Watch it was well. Oh, thank you as well. Bring us to school. Okay, let's start, guys. I see there are a lot of trades in the off-topic chat. Then I'll explain my Zoom trade, why I got into it, and why I'm still holding to it, why didn't I bail at this drop here. And yeah, okay, let's start. So let's see what Sean did. Sean traded XL and BA and LK. Let's start with those 3 trades. I'll get the Epic Pen up at 10:15. I think you don't want us to review that one because I don't see it in the 1 minute and the 5 minute as well. But this trade here, I like it so much. This is a classic ABCD pattern on a bullish stock. Look at these guys. First of all, this is the range. The stock opened in this range. It was choppy a little bit here. Sean tried to catch it a couple of times inside this range. It didn't do anything, and finally it did break up. And by the way, I talked about this in my recap yesterday. This was a healthy pullback after a breakout. Once the stock breaks out, it usually pulls back into the previous resistance area. It can wick a little bit below it. You could see it wicked a little bit below this resistance area right here, but eventually it did close above it. And once it did a new 15-minute high, Sean took it to the long side. Now that was amazing. One thing though, if this partial here gave you the 2-to-1, it's not a bad risk to reward. If not, you could have held into it. It's not really necessary to partial at the high of the day on ABCD pattern, because this is the 4th of April, 3rd of April, but no problem. Let's review it. We don't mind. You can guys send any trades. So where did I stop? On ABCD pattern. So if this didn't give you the 2-to-1, there is no reason to partial at the high of the day, because it's an ABCD pattern, ascending triangle, bull flags. Those are breakout patterns. You could always wait for the breakout for the partial, but I still like it. This partial, it was also good at the daily level, at the high of the day, and the entry was amazing. BA trade. Yeah, those are a little bit old trades, but it's totally fine, guys. BA, what do you do here? Same thing, reverse ABCD pattern, and I like this thing here. Look at this, drop down, pull back to the 9 moving average on the 15-minute chart, closed as a doji on the pullback, new 15-minute low, and then Sean took it to the short side. So yeah, I like this one as well. And what I like more about this BA trade is the M shape here. You see this pullback? It was making higher lows on the 15-minute chart. Sometimes this looks like a reversal. If someone took this thing for a reversal right here, when the 50 moving average crossed with the 9 and the 20, when it formed a new 15-minute high and when it did a new 5-minute high, this would have been totally fine. This is not a bad reversal pattern. One thing though I don't like about this setup for a reversal is this. I usually don't take it literally at the break of the 50 moving average. I wait for a pullback to the 50 moving average again. If it holds the 50 moving average one more time, that's where I get my entry. If it breaks this 50 moving average, At the pullback, you see it went up to the 50 moving average and it actually broke it down. That's where I don't really like the reversal. I can learn more from my batteries than the good ones most of the time. That's totally true, Chris. But yeah, so this was amazing, the M shape, because this wasn't a small pullback. It started forming a reversal pattern here. Taking it to the short side right here wouldn't have been a smart idea. Why is that? You could see those buying pressure wicks right here. Yes, it went up. Yes, it did a reverse ABCD pattern. Yes, it did a new 1 minute low, but this was a reversal pattern. It could simply do a higher low, which it did here, and get you stopped out at the next week. So after those kind of pullbacks, it's always good to wait for M shapes or W shapes if you want to take ABCD patterns to the long side. Good job, Sean, here. Now let's see what you did on Excel. So look at this. This long here, I wouldn't have taken it. Long failed. Was it a good entry? I don't really think this was a really good entry. Why is that? You could see that we're having sort of selling pressure wick at the top, red candle, engulfing candle on the 15-minute chart, and lower high on the 15-minute chart. On the 5-minute chart, look at this. It's slowly declining, right? It's just making lower highs, lower highs, lower highs. And yes, it did a new 5-minute high here, but it wasn't so strong. Moving averages got so much close to each other that they are started to cross, and the cross of moving averages is a reversal pattern. So if you look at the pattern, it was bullish intraday. That's good. It's making a pullback. Amazing. And you think this is a new 5-minute high, which is not really bad to take it to the long side. You have your reasons to take it to the long side. On the 15-minute chart, selling pressure on the top side. It did have selling pressure here. It did break that selling pressure here, but still it got sold off. You have an engulfing on the 15-minute chart. You have a lower high on the 15-minute chart. Moving averages almost crossing. It's starting to top out. So yeah, there are also reasons to take it to the short side. Because of this all, I would just simply avoid taking it to the short side. Now look at this. Here it's closing as a hammer. It did break this range here, this area right here. Since it broke it and went down, it should be really weak, or it should pull back up to this area, reject it, and then continue selling off. Since that didn't happen and it got back to the range and closed as a hammer, this shows you that the stock is still strong. And on the new 15-minute high and the new 5-minute high here, this would have been an amazing entry to the long side. Your short here, it wasn't bad. New 15-minute high, breaking this range, moving averages crosses, and a new 5-minute high. This is the 3-star reversal pattern, which we used to trade before, and I still trade it sometimes. But again, as I told you, what do I wait for after the moving average crosses? I wait for a pullback up to the 50 moving average, a rejection of the 50, and then a continuation for the drop. If I don't see that, I don't take it to the short side. But this was a good short there. Guys, if you have any questions, you can always stop me out or mention me so that I notice it. Now, next trade is for Gigi. Is it? Yes, it is. And then we have Lenny. This is a momentum play. This is a not bad play. You could see that it did an engulfing on the 1-minute chart here. You see this week? It was a selling pressure week. It tried to engulf it and go back to the downside. Tried to sell off. But buyers took control back and they brought it all the way back to a new 1-minute high above this daily level right here, which wasn't a bad entry to the long side, but I didn't take it for one reason. This move here from 12.80 to 13.50, 70 cents move on a $13 stock, I thought it could be a little bit too much, so I just decided to avoid it. Other than that, it wasn't really bad, and I like the early exit. It did an engulfing, it did a hammer, it did break the new 1-minute high, so it's doing a 1-minute open range breakout, but for some reason it gets it makes a new 1-minute low. And remember, what's this pattern? Huge first candle. Then you are having either a hanging man, a shooting star, a doji, and once you have a new low, that's a setup. That's where you take it to the short side. And what's your target? Your target is the low of this candle. So once it makes a new low, there is no reason to hold it all the way to a new 1-minute low, because this is a short setup right here. So that was an amazing exit on this setup. One observation: if we were to look at this as 3-bar play, the second candle on the 1 minute chart retraced 100% of the move. Would that be fair? You mean if we were to look at this as 3? The buying pressure, Ryan pushing it up. So I like this thing. Once it got pushed back up, it wasn't a bad long. I wouldn't take it because of this, as I mentioned. The huge move to the long side with no pullbacks. But taking it for 1 minute open range breakout because it got pushed back up, this was a good reason. But here, it's starting to sell off on the next candle. That's where I wouldn't have really taken it. Oh, Zoom, it's getting back up. I like that. Let me just sell it. Thank you, Peter, for the reminder. I didn't have my limit order, but yeah, that was good. Thanks. We'll get back now. You saved my trade, Peter. So the next trade here, this I wouldn't have taken. Why is that? And guys, let me know, would you take this trade to the long side? What would be your reasons to take it, and what would be your reasons not to take this thing to the long side here? Yeah, Peter is the savior. Ryan wouldn't have taken it because of the wicks on the top side. I like this, yes. Pre-market level, it's holding it, not so much. Another good reason, I like it. Any other reasons, guys? What happened here, guys? Extended, good, another good reason. But look at this, what happened here? Fake breakout, that's good, Gigi. Look at this, it did break out, right? And guys, when the stock is breaking out, if it is strong and there are buyers who want to push it back to the upside, it will run. But if it breaks up only for 10 cents move, and then it starts doing an engulfing after an engulfing after an engulfing and starts selling off, this is not strong stock. This is either a choppy stock, or it's a weak stock, or just it's not ready yet to run to the long side. Because of this here, and because it was already extended, that's right, because the daily level we have right here, I wouldn't have taken it to the long side. So good job, everyone. Now let's see. Let's get back to YouTube because I might miss them in case there are questions. Hey man, please, if I took an ABCD on 5 minutes, should I manage it on the 5 or on the 1 minute chart? And so what I am doing on these type of setups is I look for a pattern on the 5 minute chart, and then I look for an entry on the 1 minute chart. Look at this here. This actually was a good place to add on ZM, but let's ignore that. You see here an ABCD pattern on the 5 minute chart. Where is it? Let's see. Let's assume this is an ABCD pattern. Okay, I wouldn't take this ABCD pattern because it's not really so clean here. But let's look at this. It's going up, it's dropping down. I see an ABCD pattern. I see a new 15-minute high right here, 161.85. Where is it? 161.85. So I would take it on a new 15-minute high to the long side for an ABCD pattern. But where would I put my stop loss at? Where would I manage my entry at? I would look at it deeply here. I see an ABCD pattern on the 15-minute chart. Now I'm looking for an entry. It's going up. It's doing some sort of W shape right here. I would take it to the long side on this candle, and I would just give it this type of stop loss, 161.22. And look at this, 161.22. I wouldn't use the low right here for my stop loss. So you could take an ABCD pattern on any time frame, a 30-minute chart, 5-minute chart, 15-minute chart, I mean, whatever pattern you want to look at. But you need to find a good entry on the 1-minute chart just to have a tighter stop loss and to have a good risk to reward. 1 minute ABCD at 9:45. Let's see the 9:45, what happened there. No, I wouldn't have taken this one. Look at this. Engulfing candle, a shooting star, a huge drop right here. So this wasn't really good ABCD pattern. Yes, you're having a W shape right here, but yeah, this was a really huge drop for it. It was a little bit weaky, and it was a little bit far from the 9-moving average in the 5-minute chart. I would just avoid it. There was no entry for me right here. Maybe here for a breakout, I might have considered it, but I still didn't really like it. Like here, I liked it. And this is similar to a trade I've taken yesterday on, what was it? I forgot what recap I did yesterday. Anyone could remind me what stock I traded yesterday? Facebook. Thank you, Ryan. Ryan here watching all the recaps, and that's amazing. So yeah, you see guys, here we had this range right here on Zoom. There it is. and it's breaking it down. It's breaking it down. But it didn't go to the next pivot. It wasn't weak enough. It got immediately bought back up. You see increasing volume here. Doji, hammer, new high. Now this is not a bad entry. This is not a perfect ABCD pattern, but considering how strong Zoom is, how huge the asks we have up there, and considering that it broke down but couldn't break down and get back into the range, this would have been a good entry to the long side with a really good risk to reward. But I missed that thing. Perfect, Ryan. So Lenny, let's see what you did. You're welcome, Enzo. Lenny 1, 2, and 3. Let's go through those trades. Exactly, Ryan. That's fake breakdown. So Lenny, you took IMMU to the long side. I wouldn't take it for one reason. Remember, there are two main rules which are sacred to me in day trading. One, never go against the 9 moving average on the 5-minute chart unless the 9 moving average on the 5-minute chart is your target. Second rule, never go with the trend when the price action or the current price is so far from the 9 moving average on the 5-minute chart. So basically, never go to the short side here, never go to the long side here. You see this? Why is that? Because it was weak, it's consolidating, it's getting closer to the 9 moving average in the 5-minute chart. That's here, and I do expect a reverse ABCD pattern to form. If you take it to the long side here, it's not a perfect setup, but at least there is a reason. You'll have a new 2-minute high. This was a huge drop, and the 9 moving average will be your target. But after it did the move, now this is a little bit late. Yes, it's doing those higher low waves. I see them. It's looking like an ascending triangle right here, but there is a bunch of resistance ahead. Kevin, the first rule for me, never go against the 9 moving average on the 5-minute chart. So basically here I wouldn't take it to the long side because the 9 is so close. And second rule, don't go with the trend when the stock is so far from the 9 moving average on the 5-minute chart. I will demonstrate this on ZM as well. AMD, you took this thing. Okay, this is not a bad trade. You could see here the range, this moving average, it dropped down, it was wicking into it, so it rejected it once, then it closed around it, and then it did break it. So this wasn't bad. This was a good entry here, Lenny. And you partialed at the break of the high of the day, which is amazing, and the rest exited at break even. So yeah, this was really good. BA. Now this I wouldn't have taken as well. Yes, it's not that bad. I mean, if the entry was here, at least, it would have looked much better, but still I wouldn't have taken it. Why is that? Same rule. It's close to the 9 moving average on the 5-minute chart. If the entry is early here with a target of the 9 moving average, that's fine, but going against the 9 isn't the best thing. What I like about your trade is that you partialed at the resistance. Yes, it's not the daily level, it's the 50 moving average, but you still took partial and you got subbed out. And look at this, you tried one more time going against the 9 moving average, but it failed. You see, it still wasn't ready. And remember, the key to be consistent in day trading is patience. If you see that something is setting up, but it's not looking so good, just avoid it. You have, I don't know, 6-7 hours of trading and 6 or 7 hours of price action, and you need only 1 or 2 good trades. Just wait for that perfect setup, take it, and you could be done with only one trade. Yes, it looks bullish, but if it is bullish, it will go through all those moving averages and it will give you another entry. So you might miss the initial move, but market is trading in waves. What you need to do is to catch one of those waves with a good entry, tight stop loss, and a good risk to reward. Exactly, Chris. Brian, yes, I will say that second rule. I'll actually demonstrate it here. Look at this. Would I take Zoom to the long side here? I wouldn't. Why is that? It's far from the 9 moving average on the 5-minute chart. Yes, it's with the trend. Yes, it's forming an ABCD pattern, but I wouldn't take it to the long side when it is so far from the 9 moving average on the 5-minute chart. Closer to the 9 moving average on the 5-minute chart, I might consider it. I wouldn't take it because of this here. If this was a steady drop to the 9 and then a bounce outfit, I would have taken it. But yeah, when it's far from the 9 moving average in the 5 minute chart, I wouldn't take it. Now, would I take it to the short side here? It's looking weak. It's looking like it's forming a bear flag here. Would I take it to the short side on this candle? No, I wouldn't. Why is that? It's close to the 9 moving average on the 5 minute chart. So basically, if the price action is far from the 9 moving average on the 5 minute chart, I don't take it to the long side. I actually look for a setup to take it to the short side when it's so extended from the 9 on the 5. With the 9 on the 5, my target. Once I see that it's holding the 9 and start coming back up, I would take it to the long side. But here, it wasn't the 9 on the 5, it was actually the 9 on the 15 minute chart. Around here, it wouldn't have been so bad. It's not looking so good, but I mean, it's still not bad. Why is that? It broke that range to the downside here. You see it? It broke it. This is the range. It broke it to the downside. Now it's getting back to the range. It's getting back to the range. We're seeing an ABCD pattern, which is bouncing off the 9 on the 15 minute chart, coming back up. And look at this. What do we see? We see an ABCD pattern. Is the ABCD pattern by this moment fully formed? No. It's an ABCD pattern. It's formed when you see the D. What's the D? The D is the new high. Do you really need to enter somewhere at 160.50 for this setup? You don't. You see a setup which is forming, not fully formed. And you see, look at the 1 minute chart. You see increasing volume at a fake breakdown. It's getting back into the range. You could enter at 159. Just take an early entry on this thing because it's a little bit obvious here. You don't really need for the step to get formed. And that's what I was telling about. You see a setup on a bigger time frame and you use the smaller time frames as your indicators for your entries. Yeah, and I'm actually all out on this thing, and I can tell you why I took it. Let me actually demonstrate this thing. Why did I take this thing to the long side? So guys, again, you don't need this app. It's not like crazily useful, but it helps me because I don't look at the level 2. Everything I see here, you could see on the time and sales, and you could see on level 2. So if you pay close attention to the level 2, if you pay close attention to the time and sales, that's all you need. So look at this. Let me actually see that. This is the market open. When the market opened, if we zoom this out, you had no huge orders, no huge bids down there. You see, there are no huge bids, but there are asks on the long side. So those dark colors here, those are huge asks. And those light colors, those are us retail traders, small orders, okay? The darker the color, the bigger the share size. You could see that it opened at 153 or 154, somewhere right here. And there were a lot of asks, 155, 156, 158, 159, 160, 165. And there was here another order, 162, a lot of asks up. Why is that? There are a lot of sellers up there. They believe that the price will go up there. That's why I was initially long biased on Zoom. I saw the setup, I saw it opened right here, it started selling off, the candle by that moment was red, and once it turned from red back to green, I took it to the long side with only 30 or 40 cents stop loss. Took it to the long side and started partialing all the way back up. Why did I hold it all the way to 165? Because I saw, sorry, not here, where is that? There it is. Because I saw that there is a big player sitting at 165. He didn't move his order since the open, not even by a penny lower. He believes that the price will go there. Will it 100% go there? Not really. Sometimes I see that there are huge orders on the top and the price never reaches them. But it's a good confirmation or indicator. That's why on this pullback here, even though it was dropping, you see this here? Sorry, let me take those headphones, they're disturbing. I saw that the price was actually dropping down, but even though it was dropping down, there were no big bids below. There were no huge orders down there. The orders stayed up there. That's why I didn't bail on my last 5 shares and I just stuck and hold onto them. Why did I sell at 164? I just tried to sell a little bit below or before those big players. And again, guys, you don't need this program to see those orders. Just have an extra orders on the level 2. Oh my god, it's killing my storage. No problem. Let me just remove this. You don't really need this to see the big orders. Just extend the level 2 and you'll see those orders, the big bids and big asks. What I like about this is just that it's demonstrating it. Yes, Han. Unfortunately, it's payable. It's cost $170 per month, but you don't need this program again. It's just a confirmation. Now let's go to the rest of the trades because I think I'm going so slow today, Lucas. And there are still lots of trades. Guys, I'm going to go for one trade for each trader there. I'm sorry, just for the sake of the time. And if we still have time, I will go through the rest of the trades, okay? So, Lucas traded LX to the long side. Same thing, ABCD pattern. This wasn't so bad. I like this thing. It went up. It started pulling back to the 9 moving average in the 5-minute chart. One thing I don't really like about is the selling pressure on this candle. Yes, it did a new 5-minute high, but it did this 5-minute high after this selling pressure. Here, it would have looked much better, but it doesn't matter. Whether you entered here, whether you entered here, you'd have been stopped out. It's a good setup, which just simply didn't work out, which is totally fine. Then you took it to the short side. To the short side here, I wouldn't have taken it. Why is that? A double top setup, and this is the move. This is a chase, right? It's already did the move. What do you need to do here? You need to wait for a pullback with a lower high wave, and then you take it on a new low for an entry. This is the entry here. We got to be patient. I'm not really sure. Lucas, you could tell us if you are using Fibonacci. Daniel, let's see your trade. I'll get back to the trades if we have time, guys. For the new low, do you look at the 5-minute low to enter? It depends. If the trend is so strong and it's making higher highs and higher lows, like look at this. If it's so strong, like this, I would definitely look for a new 5-minute low. If it's enough weak, or it's just choppy, doing like waves, literally below resistance, retesting the same resistance a few times, I wouldn't wait for a new low. I would just take it because this resistance area right here, it's proved that it's holding it. That this is a strong resistance. You don't really need to wait for a new low to get your entry. Just get an early entry with a tight stop loss, and if this thing works out, it will give you good risk to reward. So RCL, let's see what you did here. It was uptrending. You took it and a new 2-minute low for a parabolic pullback. I see that, but it got you stopped out. You tried it one more time and you got stopped out. So look at this. The first entry was totally fine. The second, I'll tell you why I don't really take it. Now this will save you a lot of pain because I was really getting chopped out here. So yeah, this was good. It was uptrending, no new low. Look at this, no new low, no new low. It's just uptrending. It's getting extended, doing a new 2-minute low, perfect entry. But unfortunately, it doesn't work out. Now, once it does this and it starts forming a small ascending triangle, on the 2-minute chart, that's what I call wedging or ascending. That's where I don't really care about the new 2-minute low anymore. When will I care about the new 2-minute low? Once it breaks out. So if it does new 2-minute low here, I wouldn't take it. New 2-minute low here, I wouldn't take it. New 2-minute low here, I wouldn't take it. I will wait for the breakout. If it goes without me, that's totally fine. But these type of stocks here, they could get you stopped out. You could get stopped out 4 or 5 times in a row. It's horrible when that happens. You see a setup, you take it once. If it fails and it starts ascending, wait for it to break out. Because those small... don't take it to the long side, by the way, and I'll tell you now why don't take it to the long side. Because if you take it to the long side, sometimes they don't break out. This is the first thing. The second thing, which is happening more often, is that they do break out, but the breakout is so small, 10 cents, 15 cents, 20 cents. It doesn't give you the risk to reward. So it's breaking out, you don't hit even 1-to-1, and it's starting going against you, and you get stopped out. So you get stopped out on the short side, and you get stopped out on the long side. Just keep looking for your setup. The stock is extended from the 9 on the 5. It will pull back to the 9 on the 5. If you took it to the short side and it didn't give you the it got you stopped out, wait for the breakout and look at the breakout. Is it a fake breakout or it's a real breakout? If it's a real breakout, it will continue going higher and it will get even more extended from the 9 on the 5-minute chart, and then you'll take it to the short side. If it's a fake breakout, it will do this. It's breaking out, getting those people who get into small ascending triangle, chasing the big pattern when it's so extended, and you could take it to the short side on the new 2-minute low. You see this? First attempt failed, second attempt it works out. Now, the next thing, which is the worst thing when happens, this was a flat wedge. You were lucky to get sold out only 2 times. Sometimes it's wedging like this. So it's doing highs, then it's doing lows. You take it on new 2-minute low. It's doing a new high. It's stopping you by 1 penny. It does a new low, you take it to the short side. Same thing. It's doing new highs, new lows. You take it to the short side and get stopped out by 1 penny. And that's really killing me. You just wait for it to really break out or to really drop down. Don't really revenge on those type of trades because they could simply just kill you. Yeah, you see, that's it, Daniel. Dan, Andrew is there. He's actually been trading today live, but he is trading in the chat room. He doesn't stream the live trading session. Now, let's see Ramlal. Ramlal traded mRNA. This is the 1-minute chart, but looking at how much it moved here, I bet it was a little bit extended from the 9 and the 5. Let's see the 9 and the 5. And let's open mRNA here. Oh my god, this thing is so crazy. I should have left at least 2 shares maybe. So mRNA. This is from today, right? 23rd. It's 23rd. You took it to the long side. Where did you take it to the long side? You took it to the long side, somewhere around 50-40. Somewhere around 50-40. Look at these guys. Why wouldn't we take this thing to the long side? Ban list. I mean, I have CGC there, Chris. Exactly, RNA. People who got in early here or here are getting their money here. They're starting to partial. It's resistance and it's a huge move, $1.40. So in the 1-minute chart, it doesn't look so bad. It looks like it's forming an ABCD pattern, but this ABCD pattern is just extended. It's too extended. This is a huge move. Literally below a resistance, we don't chase it, right? You missed the boat, just let it go. And then what setup does it do? Remember, we talked about it at the open. Huge candle, doji, new low, people getting short, target the low. That's it. It's forming a descending triangle. I wouldn't partial at the low here. I would wait for the breakout for an extra move. The short was great. And look at this. Ramlal actually got the short. That's it here. This short, it was perfect, Ramlal. And you got a really good move. This short, it was also perfect. Why is that? This was a descending triangle. I would personally wait for this pullback because here there were no real pullbacks. This was a sort of chase, but I see that you gave it room. You didn't get stopped out, which is smart. If you shorted it here and put your stop loss here, that's perfect. You could have added here and move your stop loss somewhere right here. But yeah, this was perfect. This was perfect. This was late, but good trade management. I like how you are holding. Now let's see Avi. Traded UAL and you traded it to the long side. Now let's see what there. This is not a bad entry. This entry I like. This entry I like. Sorry, let me bring the color back to yellow. This entry is good. This entry is good. This is not really good, or I don't like it so much. Why is that? It's just continuing to go up. I need to see a pullback. Once I see it doing a new low or holding some sort of support, that's where I'll be interested. Even this, I'm not really sure about. This was amazing, but this is a little bit early of an entry. It was just simply going up and you took it to the long side on the way up, right? If you get an early entry somewhere right here, that would have been perfect. Like you see the range right here. It's making higher low waves, higher low waves, higher low waves. It's starting to break out. This entry here, this would have been like perfect entry. This is just a little bit late. Now here, after this pullback, after it held it, is not bad. After it started to ascend for a breakout is not bad as well. This was just a little bit early. Then you partialed and exited break even. Still good job there. Done. Let's see what you're doing there. JNG to the short side. This was perfect, but you got stopped out. unfortunately, in this one. And it was a little bit tight stop loss, 20 cents stop loss. It's actually not bad. I'm not sure I would have put my stop loss here. Usually my stop loss is the body. I don't put my stop loss within the 1 minute candle. Sometimes if I want to put it so to make it so tight, I do that, but it's not the smartest thing to do. So you see 1 minute candle, it's just uptrending, it's uptrending, it's extended from the 9 on the 5 minute chart, which is amazing. You should take it a little bit earlier. Try to get as good entries as possible, literally on the low. But I think this was just a little bit fast. That's why you got slippage. You took it to the short side on after shooting star on the 2 minute low. Right here, and you got sold out. Yeah, the stop loss was a little bit tight. I would have gave it a little bit more room right there. 40 cents. Let's see the risk to reward. It's not bad. It would have given you like 2.5 hours to 3 hours. So yeah, it's good, but you just got sold out because of tight stop loss. Exactly. So let's see, Mark. Mark traded IMMU and you took it to the long side here. Now this long isn't bad. I think we talked about this at the open. If you take it to the long side here, yes, this is not perfect, but at least it's a little bit far from the 9 and the 5, and the 9 and the 5 could be your target. That's what happened here. Long, scalp, and get subbed out. Now this long, I'm not sure. Trade 2 and 3 and 4 over traded. That's good. Okay, good that you know that. Look at this. First of all, your stop loss. I see that they are so tight. You get subbed out immediately. Actually, this was a long and a stop out, and then long or a short. I can't really figure it out. One trade, second trade, third trade, and fourth trade. I think it was a long and you got subbed out there. But yeah, anyway, I wouldn't definitely take it to the long side because it started forming a reverse ABCD pattern. It went into the 9, it rejected the 9, and now it's dropping down. This is not a good long. This is just, I don't know. I think this was, I would have definitely not taken this thing. It's doing a reverse ABCD pattern, bouncing off the 9 and the 5. Either short or just wait for more confirmations before taking it to the long side. This short and this short, they were perfect. Why is that? It's starting to form a descending triangle. Your entry is amazing, as close as possible to the resistance. If you draw the descending triangle, that's it. You see, you got a perfect entry right here. But one problem, really early partials, so early. Remember, descending triangle, breakout setup. If it works out, if your idea is true, it will break down. And it will work out. And it did break down. You could have just simply held it for the break. Don't partial within the triangle. Unless it's the low of the triangle. At least the low of the triangle. But still, you got a really decent move out of this one. Good job. Valentine. Let's see this. Guys, don't tell me that Zedem is at 170. Or you know what? Just don't tell me what Zedem is doing. Our first partial is small if it starts to move in your direction. I mean, that's not bad. I used to do that as well, just to calm me down. If you lock in some profits, you know that if the trade goes against you, you'll exit at break even, right? So you're on the safe side. So target. Now this trade, it doesn't look bad on the 1 minute chart. It doesn't look so bad on the 5 minute chart as well. I wouldn't take it though, because it was a little bit far from the 9 and the 5, but I see it worked out for you. You took it to the long side and you got your partial. Why wouldn't I take it? First of all, it's so wiki. I get an entry within the range. My stop loss should be the low of the range. So the risk to reward, first of all, is not there. Second thing, it's so far from the 9 and the 5 minute chart, and it's already a little bit extended. I need to see a real pullback or a little bit longer consolidation. You see here, it's consolidating for a longer time, consolidating, breaking down the 9, but it's still strong, getting back above the 9 and doing a new 5 minute high. So you are having this, you are having a W shape, you're having a new 5 minute high. You could get in somewhere here on new candles right there on the new high. Red, green, then selling pressure, then green, buyers getting in control. Now this would have been a perfect entry for this setup. This entry here, it was good still. I don't think this was bad. Why is that? There was enough consolidation. You also had some sort of W shape right here. New 5 minute high. The stop loss here would be definitely tighter. You could see that this is the range here. This was a fake wick right here. Then you take it to the long side. If you don't take a partial, you will survive this pullback and you'll still be able to get the move right there. If you take a partial, you will get stopped out at break even, which happened, which is still not bad, and it's still a good trade. What do you think about the second high being higher day failed breakout pattern? This here, yeah, I see this was a fake breakout. It was selling pressure right here, so I definitely wouldn't take it to the long side anywhere here. But look at this here, it starts to make a higher low waves, right? So if you start drawing it, higher high waves and higher low waves, it's still sort of bullish. Definitely not perfect, thanks for that notice right there. But if you get in with an early entry, if it fails it out, you could just simply exit at any time. The second thing is it still was above all the moving averages. It was still so strong for the day. You could see that the buying volume is higher than the selling volume. There were enough indicators to take it to the long side. Yes, fake breakout isn't the best thing I like to see on these type of setups because it could fail, but it's holding nicely there. So yeah, this is still not a bad long. Sam, let's see what you did there. This is Zoom, right? Yes, it's Zoom at 9:45. And yeah, I see this is on the 1 minute chart, I think. Yes, on the 1 minute chart, I think we did review this trade at the beginning. I wouldn't have taken it because it was a little bit so extended, but I see that it did work out for you. Just to notice, most of the time, let's get to Zoom to 9:45 quickly. I don't want to look at Zoom. Okay, I'm happy. No, I'm not happy. It's at 167. Yeah, I'm not happy. No. Let's see. 9:45. Was it somewhere? Is it from today? I think it's not from today. It's the 5 minute, right? Oh, okay, it's the 5 minute chart. Yeah, it's not so bad there. It's a little bit extended from the 9 and the 5, which I don't really like. But you could see buying pressure, buying pressure. Here it's selling pressure. It did break out the high of the day with the selling pressure. But still, 9:45, 9:50, still started coming back up. It wasn't the worst. I personally wouldn't take it, but still, yeah, it wasn't bad. J-Bone. AMD. Let's see the notes you wrote right there. Setup open range breakout, indicator confirmation. So you took it for an open range breakout. I'm not sure, is this 15 minute chart, 2 minute chart? Okay, it's a 5 minute open range breakout. The indicators trending up in the pre-market. SPY was strong today, holding the pre-market level. Where is the pre-market level you had? This is it? It could be this, I assume. Then new 1 minute high, entry on a new 1 minute high for a breakout, stop loss, new 1 minute low, and risk to reward at least 3 to 1, and you get 5 hours. That's amazing. Okay, now let's zoom the smaller time frames to see what happened there. So first entry, yeah, it was a little bit early. Why was this entry early? First of all, it did move. What's that, 50, 60 or 70 cents? I'm not really sure, around 60 cents right there. And it was literally below a resistance. It could have just simply started dropping there. And J-Bone noticed that, which he was really smart. Second entry was good. It started breaking out with volume, broke the resistance with volume on a setup, a 5 minute open range breakout. That was the entry. Stop loss really good. I like either this or this. Both of them were really good stop losses. I think even this, yeah, this would have been like perfect. You don't really need to hold more than that. If it breaks out and it gets back down, it's a bad setup. So yeah, you don't really need to give it much stop loss like this. This here is more than enough. And then you exit all at 5 to 1. So yeah, this was a really good one, J-Bone. What happened on the SPY? Oh yeah, SPY is just dying there. What's happening? Are there any news, guys? Look at this. 1.5 million shares in 1 minute. Guild drug failed on test. Okay, I see that. Yeah, that's horrible actually. I think that's what's causing Zoom to drop down here. I mean, it just, the market eventually is in control. If you look at these guys, look at Zoom and look at the SPY. They were independent today, right? I mean, they are slightly independent, following each other. Look at this. These 3 bars here on the SPY, they're kind of similar. They're actually not so similar. They are independent today. But look at this. Because the market is dropping with volume, 1 million shares each 1 minute, it just caused Zoom, which is not following it, to drop with it. That's the effect of the market. Tyler, let's see. Okay, we did review this trade. Extended from the 9 on the 5, new 2-minute high, partial closer to the 9 moving average on the 5-minute chart, which was a good trade. Second trade was also good short right there. Triple top, 3 times rejected view up, early entry, closer to view up, closer to the stop loss, first partial, closer to the low of the day, and then at the break. So that was amazing. Third trade, you took it to the long side when the... Where are the moving averages? I think you're not using all the moving averages we are using here, right? Tyler? What moving averages are you using? Because after this consolidation, I'll expect at least the 9 and the 20 to cross. No 9 or 20 on there. So you use the 9 and the 20 here, which cross, and this is the 50, right? On the 1 minute chart. Yeah, because I do I thought about it. After this long consolidation, I do expect to see the 9 and the 20 crossing with the 50, and I see that there is only one moving average. So this was the 50, and since it went above the 50, I bet that the 9 and the 20 also crossed with the 50 moving average in the 1 minute chart. So this wasn't a bad one reversal pattern. What I usually wait for, I told you, a break of the 50, pull back to the 50, and then a long, because sometimes the break alone is not enough. And you got subbed out, which is a smart decision. But still good 3 trades, Tyler. 2 out of 3 on one stock, it's amazing. Guild got halted, let's see it. Yeah, that's crazy. SPY is coming back up. I think Zoom will come back up. This drop wasn't because of Zoom, it was because of the market, and if this thing is strong, it will continue going higher. But let's see. Yeah, because there are new orders in Zoom up there. Actually, there are orders appeared down there, so let's see. Anyway, Holly, let's see what you did. Went long across view up, partial, then added on the way up. So I wouldn't have taken it literally to the long side here, because it was simply making higher highs and higher lows, and I wouldn't be sure where to put my stop loss at. You could put your stop loss at a new 5-minute low or below the consolidation if the consolidation is there, but it's a little bit risky because sometimes they do pull back, make a higher low wave, and then work out. But these ads here and this entry here was amazing. Oh, this was the Peter's lightning bolt. Let's see it. Peter, are you there? Okay, can you give, since you are the expert on lightning bolts, can you give us your comments on LVS and this entry?
Oh, you're catching me by surprise here. Hold on a sec.
Let me just...
sec. Let me expand this so I can look at it.
Yeah, I can open it on
Can
DAS.
you hear me there, Eamon?
Yeah, I can now. Let me open it here on DAS.
All right.
LVS. Wait, what time was it?
Talking about LVS.
Yeah, this was LVS, and let me check the timing. It was a long at 10:05.
Okay, along at 10:05 on LVS. This is a skill testing question. Okay. 10:05. And we're looking to see if it's a lightning bolt.
Yes.
Yeah, actually, Brian mentioned this morning, actually. So Brian said that it was setting up as a lightning bolt, and I didn't agree with him, but I didn't challenge him. So the only reason why is because I would be expecting us. I mean, to me, it's essentially a. Sorry, guys. Let me turn off Squawk. Here's the reason why. So if you look at LVS and Eamon, I'll try and follow where you're pointing to. A 1 minute chart is what I use to determine a lightning bolt. Okay, right. So it comes up through VWAP. So the setup is good, right? You've got strong movement up through VWAP. It pulls back. So that's stage 2. So it does pull back in that red candle and goes down. That's good. The next candle is when you're expecting it to work. So you would be taking it long on that second white candle, right? When it breaks yeah, exactly, right there, right where Eamon's drawing it. So that's your long point. You're looking for, your stop would be at the low of the previous candle, which in this case also happens to have a moving average down below it. So that's good. That's the 20 moving average. So that would give me some confidence. But you're expecting it to move up from there. Instead, what happens is it breaks down through VWAP even harder again, and that would have stopped me out. So in the way I play a lightning bolt, I actually would have been stopped out in this trade and not taken it. And then I would not have trusted that next move, because look how big that red candle is. And if you go to a like a bigger time frame, if you go to a I'm looking at a 2 minute chart here. I would almost consider it like it sort of had like on the 2 minute chart. Look how it's got red candle, indecision doji, right, or what do you want to call that, cross, and then another big red candle. To me, that would have said I don't know what it's doing. In fact, it looked short sort of at that point, and I would not have been in it for this long. So it's close. And actually, it would have been a legitimate lightning bolt setup, but it would have been a failed trade in the way I traded. So hopefully that helps. Now, in this case, I think, though, who traded this? Was it Holly or Grant?
It's Holly, yes.
Yeah. Did you manage to take this successfully? Because
It
if you played it just slightly differently than I did, see, it could have been a winning trade. You just might have played it a little differently than what I did.
Yeah, Holly actually made it a winner there.
That's good.
That's it.
So let's see. When did Holly get in?
It's at 10:05. Actually, after this, yeah, it didn't take it on that first move here, where you would take it. Holly took it here. Okay.
All right. Yeah. Well, yeah. I mean, I said there's ways to play it where you could get a good trade out of it. And obviously, it worked. So, I can't question that. But it wouldn't follow the strict rules of the lightning bolt as I define them.
Yeah.
So there you go.
Thank you, Peter. That was really useful for everyone here.
Yeah, no problem.
Then, Holly, your second entry here, I like it. Like, I would have waited for a new 5 minute high for this candle to close or to break up there. But if this entry was here, that would have been like so perfect. But still, this was good. Why is that? It broke up, right? And I like that it broke up. It's breaking up and it's retesting the previous resistance right here. The previous resistance, it's retesting it and it doesn't go down. This is not a fake breakout, right? Then you got in as close as possible to the support, which is not bad. This is actually even good. And you partialed all the way up. This was amazing. This was great. Now you're taking it to the long side here for a sort of ABCD pattern right there, if I'm not wrong. That I wouldn't have taken. Why is that? My rule extended from the 9 moving average in the 5 minute chart. Never go long when the stock is extended from the 9 moving average in the 5 minute chart. Never go short when the price action is so close to the 9 moving average on the 5 minute chart. Those two rules, they're saving me a lot of times. You tried it to the short, not bad. With an early entry. If an entry was really early somewhere right here, wouldn't have been so bad. Double top, failing to break out, take to the short side, target the 9 moving average in the 5 minute chart. But a little bit late entry with a wide stop loss, the risk to reward wouldn't be there even if it hits the 9 moving average in the 5 minute chart. Okay, that's good. Now, let's see, Peter. Pito traded, what stock is this? AMD. You took it on a 5 minute. Okay, we did review this trade. Actually, this is similar to Jbon, I think. Yeah, it was Jbon's trade. But this is the 2-minute chart. You took it at a 5-minute opening range breakout and you sold all the way up there. So yeah, wouldn't go into details, but good job there. And let's see what you traded. You traded SPXL. Now look at this. This I wouldn't have done. First of all, it's starting to top out. See, it went up and now it's resisting this area and it's starting to top out. It's starting to drop down. Weak, selling weak, engulfing candle, reverse hammer, red candle. Yes, it's a new 1-minute high, but this is not enough. When the stock is so weak, this is not enough. This is the first thing. Second thing, it's far from the 9-moving average on the 5-minute chart. Never go long on stocks when they are extended from the 9-moving average on the 5-minute chart. Once it's getting into the 9-moving average on the 5-minute chart, it's okay if it breaks it by a few pennies. If it's closed a little bit above it by a few pennies, that's no problem. I mean, it doesn't really has to literally touch it and bounce out of it. If it breaks it a little bit, goes above it a little bit, that's totally fine. You could see here it did break it and then you took it to the long side. No reason to exit. You got in inside the range, right? This is the low of the range. This is the high of the range. Stock still didn't break out. Your stop loss is the low of the range. You would have never been stopped out there. So you got stopped out there. You re-entered one more time, which is totally fine. Still good thing. You got in on a new 5-minute high after it bounced off the 9-moving average in the 5-minute chart. Now this is a good setup. Early partial. ABCD pattern, breakout setup. Your first partial, either the high of the day if it gives you the risk to reward. If the risk to reward isn't there, just hold on for the break. You see there are a lot of trades there. Like 1, 2, 3, 4. Now this is not so bad. You get in at the break. At the breakout area. It consolidated at the breakout area. So it was totally fine. Now another time you're doing it, right? First of all, you are getting into the long side when on lower highs, it's making lower lows and lower highs and you're getting in without the new high. Second thing, far from the 9-moving average on the 5-minute chart. No reason to enter there. So you could have avoided this one trade here. You could have avoided this losing trade right here by not getting in when it's far from the 9-moving average on the 5-minute chart. You get in here and you stick to the stop loss. You just make one good winning trade. You could enter at the breakout area if you want or add 2 good winning trades, no losing trades. After partialing, do you keep the same stop loss or you would do the break even? I'd do the break even after partialing. Side, I put in 1000 share, sell at 2709. It's starting to fall. Clyde, what stock is that? Now let's see. Okay, let's see Ahmed's trade and Aiden. We're actually out of time, but I'll go through your trades, guys. One trade for each one from the guys who left, and we'll be done for today. I know this we did review. I'll not get into much detail again into it. 1-minute open range breakdown, was bullish, got bought back up after an engulfing, stopped out really good once the next setup started forming. So good job here, Ahmed. Now, Aiden. Roku. Now this is not bad. 2-minute low or new 1-minute low. I think there was 2-minute low. No, there was not 2-minute low yet. But on the 5-minute chart, it was extended from the 9-moving average in the 5-minute chart. Stop loss the half the day, and you partial at the 9-moving average in the 5-minute chart. Now that's good. See, you don't go into the long side here. Yes, it's a new. Where is it? Where is that? Where is that? Okay, you go into the long side here actually. I thought this is the 1-minute chart. But if you get into the long side here, it definitely gets sold out. Unfortunately. But yeah, this wasn't a bad long. If you get into the long side here, this wouldn't be a bad long. But taking it to the short side when it's far from the 9-moving average in the 5-minute chart with the 9-moving average your target, that's a really good thing. So good job managing this trade there. Let's see. Closing this, opening this. Ayman, previous INO trade is your setup. Yes, that's not a bad step to take it to the short side. Netflix got chopped out. I think I was trading too tight. So you took it to the short side for a parabolic reversal after those. This was a good short. It was good, but it just simply didn't work out. This long here, it wasn't so bad, but I have no idea. It just didn't look good. This was a parabolic pullback. We wait for a W shape, which happened right here. Then we take it to the long side, which was good. Now this I wouldn't have taken, especially that it's literally so extended. This is a huge pullback. This entry was good, but it would have definitely got you subbed out, which is totally fine. I mean, this trade good, but didn't work out. Another trade which is good, but still didn't work out. Short, I'm not sure about this thing. I wouldn't have taken it because it's already a huge move here, right? So the stop loss will be so wide, $2 or $3, and this is so bullish. I'm not sure if it's going to break view up and the 20 moving average just to get to my target. So yeah, the risk to reward isn't here. I wouldn't take this thing here. This long, not so bad. You could see that it dropped to the 20. It started holding it, showing you strength. It was strong at the beginning. You take it to the long side, and this just doesn't work out. This short, I wouldn't have taken it. So look at this. One trade didn't work out. It was good. Two trades. Second trade didn't work out. Was good. Third trade didn't work out. Was good. All of this is really fine. If you trade this thing and you get to your max loss with those three trades, which looked good but didn't work out, it's totally fine. You did your best. You were patient. Two trades weren't really necessary right here, and yeah, that's it. But still, good job, Train. I like how you are managing your trades. IMMU. A lot of trades there. Okay, I see this. This is the same thing. We did go through this trade. Not going again to go into detail state. Long when it's extended from the 9 and the 5. Target the 9 and the 5. Then reverse ABCD pattern to the short side. And you partialed it all the way down there. So good job, M. And finally, Ray F. NVIDIA, what do you do here? This is a good long. I like it. Extended from the 9 moving average into the 5-minute chart, hitting a support area, an area it held before in the pre-market, bouncing out of there. You take it to the long side. In case you saw something on level 2, that was perfect. In case there was nothing on the level 2, I would just avoid this trade, to be honest. But if there are indicators, that was a good long right here. I like it. I like your patience. You held for a new 1-minute high all the way to up there. This long I wouldn't have taken because it's sitting closer to the pre-market area. I'm not sure if it's going to break it or no. There is still no setup. This is a strong move with no pullbacks, so this I would have avoided. But other than that, it was good. So yeah, that's it for today, guys. I'm sorry for those whose trades I couldn't check. I actually checked everyone's trades, but it was only one trade for everyone because we had a lot of trades today, so I apologize again. If you have any questions, guys, if there is a trade which you really want me to review and you really want to see how you did there or something which is not clear, you can email it to me and I'll take a look into it. Guys on YouTube, thank you for sticking here with us. If you have any questions, I'm typing my email. You can always email me and I'll be happy to answer. And have a good day, everyone.